Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, I'm back behind the mic fired up because we're making money using the poor man's covered call. In fact, I believe my last 3 trades are in the money, kicking ass, and I'm going to show you how I'm so successful. If you've been watching my channel and you've been watching my poor man's cover call videos, I have a certain strategy. We use that strategy for our first trade, and then we move on from there. I'm going to show you how I do that. But more importantly today, the poor man's cover call is an opportunity for all of us small ball players to get in the game with big stocks, yet invest maybe a third of what you would have needed to invest. And I'm going to show you how the poor man's covered call allows us to do that, because the trade I'm going to show you today, I was going to buy 1,000 shares of this company, which would have cost me $153,000. But instead, we elected to go with the poor man's covered call. We only used a third of the money, yet controlling 1,000 shares, generating near-term covered call cash flow equivalent to if I owned 1,000 shares. So I want you to sit back. I want you to try to absorb this. The poor man's covered call is not a simple strategy. Yeah, I can explain it in probably 2 sentences, but you'll never get it if you don't know options. So there's a lot of moving parts with the poor man's covered call, but at the end of the day, it is very simple. We just have to wrap our head around the Leaps call option. We don't buy shares, we buy a Leaps call option in lieu of the shares, so we're essentially simulating the purchase of shares. We're going to talk about that here in this video, so let's go ahead and get to this. So excited to show you this trade where we're absolutely making money already. And hey, look, if you like anything you hear today, subscribe to the channel. It's right there and it's free. And hey, look, if you like the video today, bang the like button. It lets me know you like what I'm doing. And what we're doing is this. We're talking about the poor man's covered call. We're talking about Chevron. And I'm going to show you why I picked Chevron for this poor man's covered call trade, for which, if my shares are taken away, will be one of my biggest cash on cash percentage profit gain I've ever done. We've laid out a lot of money to place trades, but to be making $5,300 on one trade for 30 days, that is top 5. So, and this is a poor man's covered call trade, so this is actually one of my biggest poor man covered call cash on cash projected profit cash flow. That's what we do here. We talk about this all the time. We use Chevron this time, and I'm going to show you exactly what I showed the members, and I'm going to show you the initial trade setup, and I'm going to show you the chart, because the chart tells a story. I'm going to show you what it was telling me. Now, before we get to that, I send the members these trade alerts, and a lot of times I do it through video content. Video content you don't see on YouTube, and this was one of them. I was going to invest to buy shares in the energy company CHRD. If you remember, I used that stock for a fat covered call with dividend capture. And I'll tell you what, it was successful. In this trade alert video, I talked about how I would use Chevron for a poor man's covered call trade. Now, I didn't know which one I was going to do, but I decided to do Chevron. And I let the members know in this video exactly why I would do the Chevron poor man's covered call. Now, as I started doing my research, I started to look at my initial trade setup for a Chevron trade. We're going to go ahead and take a look at that right now and talk about how I set up my very first trade. I'll show you the trade, and then I'll show you the chart, because the chart tells a story. You need to hear the story to understand why I went big guns on this trade. We didn't just go 100 shares or one Leaps call option. We went 10, and there was a reason for that. So let's go ahead and take a look at the ultimate trade that I did. Inside the phone app, if you open the phone app and you click on that particular trade, what you'll see is a little write-up. And then if you want to see the trade and all the finer details, you click on the link. And when you click on the link, this is what you get. You get to see the breakdown of the entire trade. More importantly, you get to see the world through my eyes, where I tell you exactly why I'm getting involved with Chevron with a poor man's covered call at this point. And I show you the projected cash flow. I show you the projected profit if my shares are taken away, air quotes, because I don't have shares. We have to unravel the trade, but that's okay. We're going to manage the trade and we're going to collect all of the max profit if my shares are taken away. But here's the deal. Members get to see everything, including my trade setup. And here is the trade setup. So let's talk about it because this is the most important part. If you're watching YouTube videos where they're talking about the poor man's covered call and they're not talking about this initial trade setup, you need to just stop the video and quite frankly, go find one of my videos. See, you have to have the initial trade setup perfect. Because we do not want to be in an unfavorable position on the very first trade when it comes to a poor man's covered call trade. A lot of people will tell you, buy a Leaps call option that's maybe 50 delta, 60 delta. They'll tell you to buy a 3-month leap, a 6-month leap. These are all things that I have found that have set us up for failure. Now, I don't know what your experience is, but mine, failure. So what I've done is I've come up with golden rules. And my golden rules are incorporated into my initial trade setup. And by the way, go to cptdashboard.com, go to free spreadsheets, get your free poor man's covered call tracker. If you're going to trade the poor man's covered call, you need to track it. You need to have your trade set up. Go get it. It's free. I don't spam you. Please do not try to roll a poor man's covered call and do not have some sort of tool to help you keep all the numbers in front of you. Okay, so with that said, the initial trade setup is the absolute number one thing we have to have set right. Now, where the trade goes from here, we don't know. Nobody has a crystal ball. I just did an AMD poor man's covered call trade and everything was laid out perfect. And guess what? That blew up because the stock has fallen a couple more points. It's an August 25th expiration, so I'm not really worried about it now. But we can do everything perfect and it not go favorably in the beginning. But you have to have your setup right so you could at least be on firm grounding when we start the trade. Okay, we don't want to pay too much in time value only to find later that we can't get out of the trade as profitable as we'd like because we're paying off all that time value. All right. So looking at this trade, this is what we have. Chevron's trading at about 153x. Now I'm going to show you in the chart how that is trading at the bottom of its range. Golden rule number one, we want stocks that are trading down and they're trading at the bottom of their range. We went ahead and picked the 97 delta leap. I don't want to just pick a leap willy-nilly. I want to pick the 95 to 96 to 97 delta leap because I want my leaps option to move about 97% of a $1 move in the stock. I want to be making money on my leaps. I want it to essentially mimic a stock move. And if the stock moves $1, I'd love my leap to move 97% of that. And that's what we did. We bought the 100 strike. We paid $54.35 for it. It's the January 2024 leap. Now, that's about 8 to 9 months. I could have bought the March leap, but we're going to go with the January leap for now. Notice my time value. The time value is 0.32% or 50 cents. If you understand options, you understand that the time value portion of an option is the true cost of the trade. Because remember, it's trading for $53.85. I bought the right to buy somebody's shares at 100. The leap that I'm buying to give me the ability to buy somebody's shares at 100 is $54.35. So do the math. There's over $53 in intrinsic value in the option, where the person that's selling me the call, right, the cover call writer, he don't make any of that. Nobody makes money on the intrinsic value. I don't, he don't. It's the time value portion he makes money on, and it's the time value portion I pay. That is the true cost of the trade. This is where a lot of people make mistakes. They will buy the wrong leaps call option. They will pay way too much in time value, and they don't even make money their first covered call trade. You have to make sure your time value for big S&P type companies is less than 1%. Usually, less than 1% is a great marker to use because most of the time, your very first trade is profitable. Now, went ahead and decided to sell that near-term covered call. I own the leaps call option. I own the right, but not the obligation, to buy somebody's shares at 100. I paid $54.35 for that. My investment is not the total. It's only $54.35 times the number of shares. Well, if it was 100 shares, that would be $5,435. If it's 1,000 shares, it's going to be $54,350. Now, I have the right to buy somebody's shares. I'm able to have the paper to buy somebody's shares at 100. Now I can go out and sell a near-term covered call as if I own the shares. See, I didn't go out and buy 1,000 shares and pay $153,000. What I did was I went out and bought the right to buy somebody's shares at 100, and I paid them $54.35. I have the ability to take somebody's shares and give them to a call buyer later if my near-term covered call expires where my shares are taken. Do you see how this works? Using the poor man's covered call, we're able to use a leaps call option in lieu of buying the shares, and we can still write the near-term covered call because we can be protected. We're not covered. We don't own the shares. We're protected. Now, we can move forward and start writing covered calls. It's very important to understand that. The reason it's called the poor man's covered call is because we're doing a synthetic trade. We are using a leaps call option, having the right but not the obligation to buy somebody's shares at $100, and we can then write near-term covered calls as if we own the shares. That is what they call a calendar spread. They call it a synthetic covered call. The synthetic part has to do with we're not buying shares. We're buying the leap in lieu of the shares, so we can have the ability to be protected to buy somebody's shares at 100 if we get called out. Now, the poor man's covered call part of that is we're only using $54.35 per share and not $153.85. It's the poor man's covered call because we're still doing a covered call. We're using less capital. Now, in this case, it would have cost me $153,000 to buy 1,000 shares. Instead, I buy the right to buy somebody's shares at 100. I pay $54.35 or $54,350. I now have 10 leaps call options, and now I write 10 near-term covered calls as if I own the shares. And I did that. I went ahead and picked that 155 strike. I got paid $4.20. With the leaps move, we're not talking stocks here, with the leaps move, the 97 delta would give me a little bit of stock move or a little bit of leaps move where I make $5.31. You take that and multiply it by the number of shares, that's 1,000. If my shares are taken in this 38-day window, I will make $5,308. If my shares are not taken, the stock finishes below my 155 strike price, I will keep the entire premium. That's $4,200. I'll still have my leaps call options, and I'll write another covered call. Now we start playing the game until we become profitable on our leaps call option, or when the stock moves right back to about $53.85, and we can write that covered call having our shares taken away. That's what we do when we use the poor man's covered call. Now I want to show you the charts and show you why I picked this moment to use Chevron for a poor man's covered call and why I'm so confident this is going to be a successful trade. Do you like what you hear? Members get this all the time. They got a video today on AMD. They got a video the other day on TNA, and they're going to get a video tomorrow on the TQs. We talk about selling premium, writing covered calls, selling cash secure puts, and doing the poor man's covered call. It's seeing the world through my eyes. And when you take a peek over a successful active trader who has made $91,000 money on the table in the first 6 months of this year, I'll tell you what, they're seeing a lot of trades, they're asking a lot of questions, and I bet it's up in their game. I want you to go to cptdashboard.com, click Upgraded Dashboard. You see it right there. Let me put a big old arrow to it. You see it? I give you 1 free month. Go there, sign up. Would love to welcome you aboard. And you get the free phone app for which every single trade is posted. And I have Seeing the World Through John's Eyes where I show you trade ideas. And of course, all the exclusive video content you do not see here on YouTube. cptdashboard.com, get your 1 free month. I'll tell you what, at the end of the day, man, I charge you nothing. There's not really a commitment. Look, you sign up, you want to leave, I'm not going to needle you, man. I got so many spinning plates. But what I'm here to tell you is this: if you want an experience like you've never seen, join. I give you 1 free month. I hope to welcome you aboard. Here we are. We're talking Chevron. Absolutely picking Chevron for this poor man's cover call. So notice when I do this trade, it's literally trading right here. And I'll tell you what, I couldn't have picked a better moment to make this decision. But what I showed the members, this support line. You know, when we talk about Chevron, we are absolutely talking about one of the best companies on the planet. And if this thing is bouncing off its support line 1, 2, 3, 4 times, well, that's telling us something. What it was telling me is that's a great opportunity to use that where I'm going to plant my flag. All right. So that's what I did. And when we draw it out on a Yahoo chart, you can absolutely see where this thing is just riding the line. I get involved right here. Everything from the RSI is check mark. The MACD is crossing over. I mean, this thing is proving to be a support line trader. It bounces off this support line every single time. So we're going to take advantage of that. And that's exactly what I did. We went ahead at that moment, bought our Leaps call option when the market was down. That's sort of a golden rule for me. I want to buy them when they're down so I get a good price. Remember, we're buying a call option, so call options are less pricey on a day it's down. Then we threw in the covered call immediately. We always do a covered call immediately. Otherwise, we're just speculating with the Leaps call option. We were able to collect all that fat premium, and I'll show you here what my tracker looks like. We go ahead and put in that very first trade. You can see that right off the bat, that $4,200 premium that I talked about earlier, that's in my pocket right now. Understand, this is a 7.7% trade on money invested. I've invested about $54,530. Now we collect that $4,200 up front. If this trade goes to expiration, I have my shares taken away, we're going to make that $5,300. Now, before we leave, I'm going to talk to you about how poor man cover call trades are typically unraveled. Okay, so I want you to listen. Right now, I've made a fat $4,200 on this covered call. When we get close to expiration, what we like to do is buy this near-term cover call back. And if it's in the money, meaning it's above 155, my strike price, we're going to have to pay money to close this trade. But what I want you to understand is we then will sell the Leaps call option for its current price. And because it's a 97 Delta Leap, the stock has moved higher. My Leaps call option will have moved 97% of that stock move. So where we buy back the near-term cover call and lose money, we then sell the Leap option immediately, making all the money back. You need to understand that so you can really wrap your arms around it. What I want you to do is go to cptdashboard.com. I want you to get this tracker because I want you to be able to plug in all the numbers and you can start tracking all of your trades. I want you to keep the numbers in front of you. I absolutely want you to download the tracker for free. I don't email you. I don't spam you. Keep the numbers in front of you. It's going to help you up your game, make good decisions. And if we're able to make good decisions with the best information we have, that puts us in the most favorable starting position for most any trade. Now, I hope you liked that video. If you did, bang that like button. It lets me know you like what I'm doing. And what I'm doing is this. I'm going to show you that AMD trade that I did, a poor man's cover call trade. It's my biggest cash on cash projected profit trade ever. Oh yeah, I've used a lot of money in the past for a trade, but I haven't made this kind of cash on cash projected cash flow for a 30-day period. This trade with AMD blows that away. Hey look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.